Help us take a deeper dive into some of the headlines, take a closer look at some of those focal points here this morning. Phil's Chief Market Strategist at Blue Line Futures. Phil, good morning to you. Welcome. Let's begin with, well, the Fed widely expected to leave rates unchanged today. As I mentioned, the focus is going to be on the dot plot and the S&P.
Yeah, if you look at the Fed watch, 1% chance they're going to do anything today, about a 5% chance at the next meeting, and a 60% chance at the Fed at the June meeting. So that's what we're all going to be watching on. A dot plot's really going to show sticky inflation, and the median dot plot is going to indicate fewer rate cuts, probably taking it down from 2 from 3. I still believe that there's a strong possibility we do get 3 cuts, June, SEP, and December. Summary of economic projections comes from the 19 members, and it's going to be whether or not those rates are going to be higher or not. So questions about year-end forecasts for employment, and then bond investors are going to look at the Fed's future plans for running off the balance sheet. Will they taper off the runoff? So we're going to be looking at a lot of the Treasury yields, things like that. The dollar index, dollar up at one of the highest levels since February. You had to see when that inflation data was a bit hotter, a little bit stickier, that the dollar index was carving out the low, and that's what really kind of pulled the rug out on a lot of the foreign currencies.
Yeah, we were talking about the yen, right? Kind of keeping a lid on the U.S. dollar as it had been inching its way up. The dollar wasn't really necessarily participating to the upside to the same extent that we had seen yields. But now that that yen kind of broke down, the dollar's found its way back into the middle of this 103. Now it's near that 104 handle as we look here. But let's talk about this a little bit because, okay, so the first part, you've got the Fed statement, right? Probably not going to sway much from what we heard in terms of January. That first paragraph, though, I'm hearing is going to be watched, right, as it describes economic activity. They're probably going to dial that back a little bit, acknowledge the fact that we've seen economic conditions slow a bit of a rise in unemployment, right? But to your point here, I'm looking at stocks right now. They've taken this all well within stride, right? As we head into this meeting, I pointed out at the top of the show, we're just off all-time highs.
Yeah, S&P, it does have that energy component. It does have a bit of materials in it, so that's what's helped out, provide the S&P that tailwind behind it. If you look at the Russell, it gives you a different picture. It's just lingering right on that 50-day moving average. I think like 2041 to 2035, your critical level of support, we break in there. Could be a serious breakdown on the Russell. The NASDAQ really, to me, is neutral trend. You got to be above 18,560 in order for a breakout to reignite the bulls. And if you do break down like 17,900, I think it's party over. People are going to start shorting that market. So, we'll be watching all this. It's going to be a quite volatile event. If you don't have to step in there, don't take that unnecessary risk because it'll probably be quite volatile from a trading standpoint. And if you do happen to go in there, have a plan going in, trade your plan and don't deviate your plan. Remember, they do have minis and micro contracts, so you can get some action and in a small way if you need to play.
Yeah, I like that. That's good advice, right? A good reminder here in terms of traders who aren't as experienced with an event like this or as proficient, right, in many ways. Today's a good day just kind of sit back and watch, right, and learn a little bit. Let's take a look. We just pulled up the NASDAQ chart. To your point, we've seen strength in tech. That's definitely been the leader, right? We've been kind of looking for this broader-based representation from some of the other names, and it's started to come into play. I wonder if that strength of the dollar is going to derail some of that momentum we've seen. But here's a look at the Russell holding above the 50, which is down around 2015. That blue line, you got us holding well above the 200-day moving average. I wanted to take a look here, though, as the Russell has been a bit of a laggard. NASDAQ's been very strong, as we did pull up that daily chart a second ago. Here you can see some of the price activity recently in the ES. Look at this, Phil. This is a pattern we look at a lot here on the Future Show. High conviction yesterday in the day session trade, and then you get that sideways consolidation, acceptance of this upper level. And as I take a look at some of the price activity we've seen this month, holding above the highs from last month, you see that playing out here. I just want to show you where we are, taking a quick look at the S&Ps here. A very similar chart to what we just looked at in terms of the NASDAQ. But you've got crude oil, which has been inching higher here. One of those kind of, I feel like it's a thorn in Fed Chair Jerome Powell's side. This week, WTI back above 83.
Yeah, I'm scratching I had to go fill the gas tank up, and I was like, man, we're back at these levels again? Come on.
Well, higher than we were last year in terms of AAA, according to the national average for a gallon of gas. We've now topped the levels that we were this time last year.
Yeah, and if you look at crude oil, it is bullish trade and trend. We've come up here, on the May contract, we're up well over $80. So I think you got to buy the dips on crude oil. I was mapping out some levels a minute ago on May, anywhere in that 81.50 down to 81 range. I think it's good level of support. I think we're going to ramp up 83 and a half. So When it comes to energies, that's going to be a major component you have to have. And if you look at like when we're watching the S&P 500, there was a bit of a rotation trade where we saw like healthcare, we saw some of the financials, the energies all taken up, and then it looked like a lot of the tech in the portfolios were kind of slacking a bit. So that's where you're getting this rotation trade. But I really like the energies a lot to the upside. I think that's got to be the place that you're at, and it's going to deviate, hang out higher for longer, and that's it. That is the thorn in the side of Jerome Powell right now.
One thing that has me a little bit concerned, and speaking of that thorn in the side, let's pull up this chart because not necessarily on a tick-for-tick basis, but we do see energies and the 10-year track each other fairly closely, right? 10-year's been holding up here around this, again, 3.5 level. Just below that, you've got crude hanging out here right around, again, just shy of 83 recently. So this is a chart to keep an eye on, I think, again, because if we see further gains here, then that really pushes back on some of those Fed cut expectations. Hey, let's talk real quick. I'm not sure if you heard me mention at the top of the show, but UK inflation, the data this morning, showing again that it's at the slowest pace that we've seen in terms of increases in the last 2.5 years.
Yeah, in the British pound here, it's starting to break down, so it's continuing to sell off. I don't think that the chart pattern on all these foreign currencies look like disasters. Yeah. Everything from the Aussie, the Canadian dollar, the Japanese yen. The longs, they threw in the towel. They were hoping some guidance for more interest rate hikes going forward, and they didn't get it. When you go back to real quick on like the Treasury yields. 2-year yield, you want to look at the February high was 4.72%. Now we've got a lower high in March, 4.68%. You got to write those two numbers down. We break above that, it's going to be a real problem here for like gold, silver, things like that. The 10-year, there's a double top at 4.35%. The 30-year is the line in the sand at 4.5%. It's really important to know those interest rate levels because it's going to dictate a lot of where these other markets go. That's the tail wagging the dog right there.
Absolutely. Let's take a look at a couple of those markets here real quick. I wanted to pull some charts here. You were moving so fast there through the products, Phil. I know a busy day, right? We're all ramped up here quite a bit here. Take a look here. You got the Japanese yen, as Phil mentioned. It's been coming under pressure here. And I think with these currencies, these G10 currencies coming under pressure, you've got the euro starting to roll over a bit here recently. Here you've got the pound starting to come back off again. Let me just show you with the three currencies we looked at, which have been weakening. Look what's happening. You got that dollar inching its way back up to 104, and definitely looking at the 10-year, right at that 4.3 level. We saw it as high as, I think, just shy of 4.35 this week. But you mentioned gold here. Lastly, I wanted to get your thought on that because we have seen the yields inching up here, gold pulling back off that 2,200 level. But Phil, 2 steps forward, 1 step back. I mean, a trend that makes, and we've certainly seen that, right? You've had to be patient, but the bulls have been rewarded handsomely if you've been willing to hang on.
Okay, on the gold market, parabolic chart patterns are only good for that initial entry and that rise up. So you had like $130 in a 5-day move. Since then, prices have been slowly drifting lower. I think your line in the sand is that 2150. You've got to hold that. And if we close below 2145, I think that could be a big exhaustion down. If you look at the silver market, it's forming a head and shoulder pattern. The copper market's a more aggressive one of it. They've already pulled the rug out on the platinum market, trading back below $900. Back on the gold thing, your level here, you want to see that move over 2175. I think that reignites the bulls and it has a true shot to break out over 2200. So I'm going to sit back here with some popcorn, watch this whole thing play out. It's unnecessary, like I said, to go in there and take some real action. They do have a 10-ounce contract, which is great if you want to just step in a little bit, $10 a point, $100 for every $10 move. So, you could easily go in there, the 2150 level, put a stop in $20, $25 lower. Every person's going to have their own risk parameters that they need to work out. But if we do get that breakout to the upside, it'd be nice to have a little bit of exposure to the gold market because chances are it's going to rise back up.
There we can see the move off the lows from last fall, recently to new all-time highs up above 2,200. If we could just pull this chart here, because I want to point to how we've tested the 50-day moving average a couple times here. This chart really speaks to that longer-term strength and to my point about the bulls needing to be patient here. Phil, a solid reminder here in terms of the micro contracts, right? A reminder in terms of, hey, if you're not familiar trading these types of events, maybe today is just a day to kind of sit on your hands, right, and just watch. But if you do want to dabble, again, those smaller risk per tick per contract size products, I think, is a good way to kind of dip your toe in the water here. But talk to us as dust settles from an event like this, right? As we kind of look into the second half of the week, what should we be watching for, Phil?
Oh man, I don't know. We got to survive today before we go to the second half of the week. So we'll see, because this is like a reset on the market. So you're either going to get the tailwind or you're going to get, thumped in the head with a 2x4. So you got to wait and see. You can't really plan your week out there. So this is it. This is like March Madness. You're either going to get eliminated today or you're moving on to the next round.
All right. Well, this gives us quite the build-up into today's event here, and maybe that explains why the market's been kind of in this holding pattern, right? Consolidating up near these all-time highs, a lot of optimism, but still a bit of hesitation as well. Phil Streible, appreciate you joining us here. Thanks for sharing part of your busy Wednesday morning with us here on the Schwab Network. Phil's a chief market strategist at Blue Line Futures. A quick break, but stay where you are. When we come back, we're going to continue to focus on the upcoming